back to channel. Today we're going to be looking at Docusign. For those of you who don't know what Docusign is the online digital document agreement signature. When you do business with different companies and to eliminate sending papers here and there, it eradicates that aspect of it. With Docusign, you receive you initiate a contact, document is raised, both agreed, both party signed and it's sealed. It is legal. It eradicates a lot of paperwork and bureaucratic systems. But then, for those of you who don't know Docusign, we will have a look at their website to see what they do. Docusign did extremely well during the lockdown, because during the lockdown, the weren't logistics, people weren't moving, we were all indoors, so working. But business has to go on, some business has to continue. So all those agreements were being done by Docusign. And Docusign is an application that is seamless. The integration is seamless with different kind of software. The software like Adobe, Salesforce, Microsoft, most of other software, providers are actually using Docusign. We'll have a look at their website. Let's have a look at it. Before then, they beat the top and bottom on their revenue. The revenue is 600, and the actual revenue, is 622.18 million, while the estimate is 602.6 million. The EPS, the adjusted EPS is 0.44 cents, while the analyst estimate was 0.42 cents. So it actually beat top and bottom. Let's have a look at the details of the earnings. We also have a look at the website. Then we have a look at the technical chart for price action. Let's see what we can see on the chart. Let's have a look. Here is the website for Docusign. The way the world agrees, more than 1 million customers and 1 billion users trust Docusign with their critical and essential agreement. Docusign, it's really all about signing a document digitally. Appending your signatures, via online instead of physical, face to face. Docusign did extremely well during the lockdown. It enabled businesses to transact as normal. While even though they are miles apart, but then it allows them to do business, contract collaborating for every stage of the life cycle. This is the stages: initiate, contract, add, document, sign. See, um, yeah, integration for every workflow: Google, Salesforce, Workday, Microsoft, Slack, SAP, Zoom, and Intuit. They're all what I mean. They all use DocuSign, or it integrated integration for every workflow. It works with their workflow. Let's have a look at the investor relation. Um, this is the investor relation. We talk about the financial summary for the Q2 earnings. It beat the Q2 earnings, top and bottom. Um, let's check. I think I already have the Q2 um, earning release open here. This is under the investor relation. DocuSign announces second quarter fiscal 2022 financial report, September 2nd, 2021, San Francisco. I'm proud of how our team has continued to stay in front of the evolving COVID business environment, helping our over 1 million customers and over 1 billion users move forward. This has driven the world performance for our business, reflected in 50% year-over-year Q2 revenue growth, said Dan Springer, DocuSign CEO. Organizations of all types and size are leveraging the power of agreement cloud to digitize the most foundation process of doing business, the agreement process, starting with e-signature in partnership with our customers. were eliminating paper, automating end-to-end agreement processes, and enabling better experiences in anywhere economy. Second quarter financial highlight: total revenue was 511.8 million, an increase of 50% year over year. Subscription revenue was 492.8 million, an increase of 52% year over year. Professional service and other revenue was 19.1 million, an increase of 3% year over year. Billing were 595.4 million, an increase of 37% year over year. GAAP gross margin was 78% compared to 74% in the same period last year. Non-GAAP gross margin was 82% compared to 70% in the same period last year. GAAP net loss, basic and diluted share was 0.13 cent on 196 million share outstanding compared to 0.35 on 185 million shares outstanding in the same period last year. Non-GAAP net income per diluted share was 0.47 on 208 million shares outstanding compared to 0.17 on 203 million shares outstanding in the same period last year. Net cash provided by operating activities was 177.7 million compared to 118.1 million in the same period last year. Free cash flow was 161.7 million compared to 99.8 million in the same period last year. Cash and cash equivalent, restricted cash and investment were 887.2 million at the end of the quarter. A reconciliation of GAAP and non-GAAP financial measure has been provided in the tables include the press release. An explanation of these measures is also included below under the heading Non-GAAP Financial Measure and Other Key Metrics. Operational and other financial highlights. Docusign agreed Cloud 2020 product release 2. Docusign announced many new capabilities with highlights in the following areas: Docusign e-signature, Docusign usage, Docusign CLM, which is a new connect with SAP Ariba Contract Workplace. Other areas: split document for Docusign rooms for mortgage and new connectors. Outlook: the company currently expects the following guidance: quarter ending October 31, 2021, in millions, total revenue. Let's move on to the technical chart. You can have a look at detail of this in your own time to understand. But let's have a look at the technical chart for price action. This is Docusign technical chart. Market capitalization is 11.36 billion. Shares in float is 194.8 million. Shares outstanding is 200.8 million. The EPS is 82%. The P ratio is 32. 5-year P range is 228 to 3418. Return on equity is 137%. Cash flow $3.23. From 2016 to date, in the past they were negative and they were profitable, and also negative. They were really profitable during the lockdown. Now let's have a look at here. It's trading $56.58. 52 weeks 52 weeks high. Look at the 52 weeks high is 288. 52 weeks low is 53. Now 52, it is currently trading minus 80.4% of 52 weeks high. Let's have a look at other information here. The owners, we have 47% fund, bank 1%. Checklist: Peter Lynch 3/8, Warren Buffett 11/16. I'm surprised. Benjamin Graham 7/13. Let's have a look at technical. It is currently below 10 weeks moving average and 40 weeks moving average. This is 10 weeks moving average and 40 weeks moving average. Guys, as you can see, you don't need a soothsayer to tell you that this stock was trending down. Even the moving average tells you the direction. Guys, it is still downward trend for Docusign, even though they beat top and bottom. However, do your valuation. We have rated it as a buy. It doesn't mean you should just jump on it and don't look at because it's trading off 80% to just buy. You need to do your own valuation, use your own metric to be sure that this stock is good for your portfolio. And you also need to understand what they do. That's why we visited their website and check other information there. Now let's have a look at it on a daily chart. On a daily chart, you can see it has been trending down. However, it also gives you an opportunity to evaluate it to see if it's fitting to your portfolio. So use your own criteria or use one of the metrics to see. You can go on Guru Focus. Guru Focus has a lot of these super investors metrics, and there are a lot of other ways you can compare the P ratio with the other one within the same industry. You compare apple to apple, not apple to pineapple. No, you compare stock within an industry with the same other stock in the industry to really get the better value. And you need to get stocks. You need to get these shares below when they're below their intrinsic value. It doesn't mean that it's only when they are going down. You need to understand what is intrinsic value. Guys, you have seen the technical chart and you have seen the details of the earning. It is not every stock that is down 80% from the 52 weeks high that is cheap. No, you need to check the P ratio, you need to do the price to earning ratio. You need to make sure that you do a good valuation. You need to also check the total liability to free cash flow. Make sure these stocks, this company is not heavily indebted. You know, check to see that the company can actually pay the amount of debt within 5 years. Those are the kind of things you should look out for. Do your valuation. Thank you for watching this channel. We continue to produce content that will support your investment journey. Please call again.